Hi everyone, welcome back to the channel. In this video, we are going to talk about the anti-hustle asset allocation in portfolio. So first, let me share some of the lessons I learned from my late 20s. We are told that to be a good investor, you have to be active. You are told you have to hunt for the next 10x stock. You are told to monitor every headline and every move the Fed makes. We are taught to hustle our capital to its absolute limit. But I've learned the hard way that this is a young man's game. In my late 20s and even in my early 40s, I tried to pick the multi-baggers. I wanted the home runs. The problem was I didn't truly understand the moats of those companies. I didn't have a full grasp of why they would actually grow over 20 or 30 years. Picking winners is incredibly hard. Over the next decade, I shifted my focus. I now primarily look at large cap companies where I understand the business. I look for a clear competitive advantage, but even then, there is always a risk. The risk is simply that I don't know what I don't know. What if the goal isn't to be a genius? What if the goal is to squeeze every bit of peace out of your life? Today we are talking about the anti-hustle asset allocation. So what is the anti-hustle mindset and the US advantage? Most people build portfolios to maximize their total returns. The anti-hustle investor builds a portfolio to minimize their total attention. Your strategy should reflect your exit from the daily grind. The core philosophy here is good enough. Would you prefer 95% certainty of a high return with 100% daily stress? Or would you prefer 80% certainty with 10% stress? For me, the 10% stress option wins every single time. Now to achieve this, I keep my largest allocation in the US markets. Why? Because the data for the long term is very clear. If you look at over last 30 years, the S&P 500 has annualized returns of about 10.8%. Compare that to the rest of the world, which returned around 6.5% in dollar terms. The US is the engine of global tech innovation. Even though our plan is to move back to India, I am staying the course here. I have some allocation in India, of course, but the bulk of my portfolio stays in the US to leverage that long-term growth. So now we come to the three pillars of allocation. So what does this look like in real account? We break it down into three specific pillars. Pillar 1, the Lethargy Core. This is your low-cost total market index fund. It is the engine of your wealth. It requires exactly zero maintenance. This pillar allows us to do other things, like spending quality time with family or planning our move back home. Pillar 2, the sleep at night buffer. This pillar is not about chasing yield. It is about high quality bonds, cash equivalents, or even gold. Think of this as your emotional shock absorber. Markets will crash. It is a mathematical certainty. When the market drops 20%, most people panic. The anti-hustle investor doesn't even feel the need to look. This buffer keeps your blood pressure low when the world is screaming. Now, pillar 3, the anti-FOMO bucket. We are all humans. We all have the urge to do something when we see a hot trend. This bucket is a small slice, maybe 5% of your total. Use this for the stocks you just like. If you scratch the itch here, you won't touch your core plan. So this brings us to another aspect of portfolio allocation and management, the cross-border complexity. This boring strategy is vital for my future move to India. Cross-border wealth management is incredibly complex. Tax laws change the moment you move. Dividend income is taxed differently once you change the residency. The more active my portfolio is, the more of a nightmare it becomes. The more turnover I have, the higher the tax drag. I want income from dividends, rental properties, and pensions, but I want it to be hands-off. The simpler the portfolio is now, the more peaceful the portfolio will be later. Peace isn't just about the balance of your account. It is about the lack of complexity in your life. So in conclusion, let's talk about your action step. There is no golden spoon here. There is no secret tip that will make you wealthy overnight. There is only the discipline to be boring. Take a look at your own holdings today. Ask yourself this one question. How many of these positions require me to pay attention to the news? If the answer is more than 2 or 3, you are still hustling. You're still working for your money. The goal of this allocation is to make your money work for you. Stop chasing the hot asset class. Start chasing your own time. Let me know in the comments, are you still trying to pick the next big multi-bagger? Or are you ready to embrace the boring? If you found this helpful, please hit the like button and subscribe. Until next time, stay zen. Thank you for watching.